Hi everybody, Alex Deployer from Expert Forex, and in this important video I'm going to show you how 3 people became multimillionaires trading the Forex market and how you can copy their process and also get access to all their trading strategies and techniques. So in this video, as I said, I'm going to be telling you the story of the 3 millionaire traders and how they were created. You're going to get access to most of the courses that were created by this group, and you can get access to all the trading videos that were created showing most of the techniques used. We're then going to have a look at one of the critical tools and approaches used to create success, and we're going to provide our premium forum members with a free downloadable tool. So in 2002, 3 guys got together and attended a Forex trading course in a place called Midrand in South Africa. Now, that consisted of Barry Thornton, myself, and another trader, and we became quite good pals during the course. The third trader had a ready set up trading room at his home. So he had 3 workstations, he had a TV going, and he had a screen with a projector and the whole lot, really equipped pretty well. And he invited us to join him. So every day we would get together for 8 hours and trade the UK and the start of the US market, the most important parts of the market. And during this process, it became a big think tank. We would study trading techniques, we'd test those techniques, we'd read any books that we can get hold of, we'd subscribe to magazines, we joined trading clubs. We were totally immersed in Forex trading. And that amount of time gave us a lot of time to back test a lot of strategies and brainstorm techniques. Unfortunately, in those days, automation wasn't really great, so everything that we did on a manual basis. I'm talking about 20 years ago when the internet was really not that strong in the Forex trading game. A lot of our courses were DVD based. We would have to buy the DVD and to watch them. Today, it's a different story. YouTube is just full of videos about any technique that you would be interested in. And then the most important part of this was that on a Saturday when the market was closed, we would get together to analyze the trading for the previous week and to plan the trading for the next week. And then that is where the think tank affectionately became the stink tank, because it all depended on how much beer was drunk the night before. But during this process, we realized that all the courses presented to us and what that we had done and what people were talking about, which you could basically call conventional wisdom, were ineffective. They were strategies borrowed from equity trading in those days. And we realized that most successful Forex traders developed their own styles and their own techniques. In fact, we found huge flaws in most of the strategies that were generally provided in those days. They were generally following the herd type of strategies, and in fact created a lot of bad baggage for a lot of traders that latched onto that trading information that was available in those days. We realized that true success came from our own efforts. And we soon realized that you can't become strong from paying somebody else to do your push-ups. So we rolled our sleeves up and we did an immense amount of work testing every single indicator, testing every single technique, analyzing our trades, doing as much as we can to gain knowledge and experience trading the Forex market. Now that lasted over a year, and sadly our circumstances changed and we slowly drifted apart. Barry Thornton became extremely successful employing traders that he trained to do his trading for him. He built up a business where his income was well over $1 million a year, and this continued for probably 14 or 15 years. So now these traders are too close to the age of 70 for comfort. And most of the techniques that were developed then are available freely on the Expert Forex forum, on the YouTube channel, and we have built them into our EAs. I'll show you where you can download all these free courses and free videos, but I think what I need to focus on two specific items that turned this group from an ordinary trading group to a very dynamic and successful group. Now, the first thing is, and you might find this really simplistic, we analyzed every single trade that we took, whether it was positive or negative, to see if we could learn as much as possible from every single trade. Now, there's a lot to learn from every single trade. Every single trade can be improved by having better stops, better targets, better entries, and so on. So the three of us would take each other's trades and we would project it onto the screen, and we'd talk about each trade one by one. And soon we developed a trading style that on average produced very high success rates. So if you are not keeping a trading diary and analyzing every single trade that you take, you are losing out. And this includes trades taken by your EA. You just look at the trade that your EA is taking. Is it entering too early? Is it entering too late? Is the stop too big? Is the target too big? And so on. And you can learn from every trade you take, even if it is an automated trade taken by a robot. And you can then take action on that. You can change the settings, you can change your technique, and so on. And that is what we did. So that is very important. And because we had gone into so much detail of testing every indicator, every time frame, every currency, that type of thing, we knew how to remedy negative trades very easily. How to change indicators to give you better signals. How to determine stops in a better way. How to determine targets in a better way. How to use following stops creatively. But you have to do that groundwork. You can't buy that knowledge. That has to be built into your experience base. As I said earlier, you cannot pay somebody to do your push-ups. You can only get strong if you do your own push-ups. So that's number 1 point. And as I said, it might sound simple, but that is the one basis where we built up a high success rate number of techniques. Now, the second one is most probably the most important one. We became experts at creating zero risk trades that are topped up. Now, the word top up means you basically increase your position size. We very early in our trading careers realized that you cannot get rich trading 0.5% or 1% of your account on every trade. You have to multiply your exposure to successful trades so that you can in the end make maybe 10 or 20% return on one trade. Now, this technique again requires a huge amount of experience and the ability to trade at a high success rate, which you have to develop before the time. But I'll try to simplify essentially how it works. Now, this is just a crude example, but basically if you enter a 4-hour trade that has the potential of running for, let's say, 120 pips. One thing that you could do is once this trade becomes 20 pips, let's say, successful, you could move in a break-even stop so that that trade becomes risk-free, zero risk. So that's a simple example of creating zero risk. But then that trade would move on to, let's say, positive 50 pips. What you can then do is you can add to that position. So if you started with, let's say, one lot in trade 1, you could then add maybe another lot or even 2 lots to the trade. Then you'll then have 3 lots running, and then the trick is to position your stop in such a place that should the price come back, you will exit all 3 of those trades at 0, so you wouldn't make a loss. So again, that is the next phase of zero or no risk trading. And we became experts at that. That is the only way we could become as successful as we were. by adding to our positions, by multiplying the effect of a successful trade. Again, that's built into a lot of our EAs. We in fact have the double in a day EA, which uses exactly that principle, but it is totally misunderstood by users. It's a manual tool and very few users, because they don't have the first phase, which is checking all of your trades and building up a high success trading technique. Now, another aspect of this, creating zero risk trades, was we also realized the value of a negative deal. So let's say you entered a deal on the 4 hour, you had a big stop and a big target. Let's say your stop was 100 pips or so, and your target was 120 pips or so, and your deal starts going negative, and it's getting close to your stop. Now, in most cases, people would say, stop out, we've got a 70% success rate, doesn't matter, we'll just move on. But the value of that loss is actually fantastic, because what we did, we used that loss to create risk-free trades. So let's say you were buying and the transaction went south and you were pretty close to your stop. It means you can, on a risk-free basis, enter sell trades. So we looked at the trade and said, all right, on a 4 hour, it's a buy direction, but on the 15-minute, you might identify a number of sell trades. Now, by taking those sell trades, you are hedging your transaction within another transaction that you're pretty happy with, should it be stopped out or whatever. But we actually didn't let it get stopped out, because we used that to hedge successful other transactions. And the price does travel in waves, and we ended up cashing in a lot more trades than the loss was on the original trade, because all of those trades were risk-free. They were all sells when the base trade was a buy. So we were hedging, but we traded a lot more stable. Now I've never expanded on that much, because it's a little bit too tricky for a lot of traders to understand. But essentially, the concept was analyze every trade that you make, and then try and turn your trades into risk-free trades as soon as possible, and then add to your position. And just using those principles, we were able to create the most amazing returns on we could double our accounts in a week. And just imagine if you're trading on an annual basis, that turns into huge amounts of money. Now, the average trader is not going to become successful by just switching and using these techniques that I've just described, because they don't have that immense amount of work that happened before the time. And you must appreciate that. So we have given many of our most fantastic techniques to people, and they haven't been able to convert, because they don't have that automated experience and knowledge to convert that technique into money. You also need a lot of confidence to top up on a zero risk basis, and we had built that confidence up. Okay, so that's a bit about the story of how 3 brand new traders became millionaire traders within, I would say, an 18-month period of first seeing Forex trading. So the next question is, where can I find all this information? So I'm going to quickly show you where you can find a host of our old courses, which you used to sell, in fact, and they are now freely available. As I said, we're too close to 70 to worry about selling them anymore. And then we have a whole lot of videos that I can show you. So let's go into a browser and have a look at that. Okay, so here we are on our free forum. It's the forum of the Money Making Forex Tools website, and you can go down in this forum and find the most amazing things. But I'll show you where you can find the details of the courses that I spoke about earlier. So this forum also has all our owner support forums, but here we have free Forex trading courses and books. Now those are the ones that contain the information about many of the techniques that we used, and you can go and have a look at those courses. I would say start with a simple and easy Forex series. Here it is. There's the lifestyle trading approach. Now that is a really good one, and you can move on to there once you've done the Forex, the simple and easy series, and then there's a whole lot of other ones, the long candle course, the magic momentum, magic moving average. There's a whole lot of other courses that you can go and do, but here are the crux of the techniques and the methods that were used by the three traders. As I said, this forum is free. You merely need to just join it, and you can have access to all of those courses, and you can download the PDFs and study them in your own time. Okay, so the next place to go is the Expert Forex YouTube channel, and here I'm on the channel. I'm not at the home page. I'm at the playlist page, because that's where all the courses are grouped, or all the topics are grouped nicely, so that all the videos for that particular topic are included in the playlist. And here are the playlists. I'm just going to create that one, and there we go. So all you need to do is go down this playlist, and you can get videos on all our key techniques. For instance, here's the GTM technique. There's all the indicators that we provide. There's the you'll find lifestyle playlist. You'll find channel trading playlist. You'll have, and all of these are free. So go and have a look at these. Over 1,000 videos that you can go and have a look at. But start with the playlist, because they have them grouped in the topics that you might be interested in. All of this again is free. These are the techniques that were used by the three traders I've mentioned. You won't find much about the zero risk technique. The closest you can do is look at the double in a day videos that are shown here, that explain how those top-ups happen on a risk-free basis. That is the key. You can top up, but a lot of times if it comes back, it can actually ruin your account. If you don't do it properly and you don't place your stop at a break-even level, that is the key to that technique. But again, you need to be a highly competent trader to use that technique, and that was the one that turned the tide for us traders. Now, links to the forums that I've just shown you will be in the description of the video, as well as in the commentary of the video. Okay, so now we've covered the first 3 points here. Okay, so what happens is we often get asked, how can I see my past trades on the trading charts? And I'm going to show you a couple of techniques on how to do that, and this is what we used to do. So let's say there was a trade over here, and I'm going to use the pound here, the pound USD as an example. What you do is you pull up a new chart of the pound USD. That's at the standard format of the MetaTrader 4. And what you do is you click on that transaction and you pull it onto the chart. So what will then happen is the transaction will bounce onto the chart. Fantastic. And you then increase the size, and you can then look at the trade, and I'll increase it one more time. And as you can see here, here is the entry. It's a sell. There is the stop. So the stop almost got hit, and then it went down and hit the target over here. So that's what I mean by analyzing past trades. So this is what we do. We'd pull up a trade and we'll say, now, was that the best entry point? And we'd debate whether that was the best entry point. Should it have been that level of resistance, or that level of resistance would have been a better entry point? And we'd debate that type of thing. And then the exit looked pretty good. Then are there other methods that would have been better? And what we do is we'd slap on, for instance, a moving average, and we'd put on maybe a 4 offset by 4, and we'd make it yellow, and we'd just make it ordinary, simple, and we'd say, would that have given us a better exit? And you look here, and you say, no, the exit would have only happened over there, so that is still a great exit. So those are the kind of debates that we used to do, and that is how you pull one transaction onto a chart. Now, if you are trading an EA that generates a lot of transactions, you want to see all the transactions, and I'm going to show you how to do that. So I'll open another chart, and there we are. Again, we'll go back to the same thing, and let's say we want to now see all the trades on the pound USD. Again, you click on that transaction, and this time you press shift, and then only do you move it. And what will happen, it will then bring out all the pound transactions that have happened. And if you go back, you might find some more ones there, but here are the most recent pound transactions, and we can then have a look at the same thing. And there's one of our transactions that looked like a break of support, entered, nice exit there. The stop was in fact too big, and so on. So you can then analyze a group of transactions, really handy for robot trading. Now, then you look at these ones, they're in the middle of nowhere. How can those transactions exist? So if you go and you highlight the transaction, you will see it is a pending order that never got activated. But the pending order had a stop there, a target of there, and it never got activated. So then we say, why did you put your pending order over there? And we analyze possible reasons and so on. So that is basically a retest of this support and resistance level. That's why that was never activated, so that's fine. Then we say, all right, next transaction, which is the one we've already looked at, analyze that. And here you see another funny transaction that just got out at break even, and it was in fact a sell stop that never activated. In other words, a pending order that never activated, and it then closed after. We normally close these things after 24 hours or so. And then there's more transactions. Here's one break. That was a break of a trend line. Would there have been a better way of trading that one? And so on. You could then analyze which indicator might have given you a better entry and so on. But there is the entry, there is the stop, and there's a target. And this is fairly recent, and it looks like the entry really happened at a really good time. There is the stop, the target that got hit. Okay, so that's how you load one transaction, or you load many transactions onto the same chart for the purposes of analyzing your trades and brainstorming ways of where you could have possibly have got in better, or manage the transaction a lot more, possibly by using a trailing stop or manually closing the trade, or that type of thing. Then we've created a show my trades indicator. It's a gift to the premium members in our forum, and basically you load it into your indicators file. You load the currency that you'd like to have a look at, and you simply drag the indicator onto the screen. You can change all the colors to your requirements, and you click OK, and it will show you the trades made for the pound on your account. So it will basically give you the stop, the target, the entry, and then the results as a label. So you can actually see how many pips you've made and how many dollars you've made on these particular trades. Also, if you go to the actual label like I'm doing now, you can see the full details of the trade, what lot sizing was used, the exact entry, the exact exit, the stop loss used, the take profit used, and how many pips were generated and how many dollars were generated. So really handy little tool that we have for our premium members. Okay, so premium members can go down to the premium member forum, and then go into a benefit one, which is the premium indicators one. Just click on that, and there's the show my trades indicator. Click on that, and you'll be able to download the indicator directly from that post. Here is the download. Okay, so let's have a look at the checklist that we used, and this is a very basic summarized version of the checklist, but it does cover the major events that you've got to take into account. And the one thing is that most traders, when they have a negative trade, they assume that direction, the wrong direction, is the reason. But there are many, many other reasons why your transactions fail. As we can see here, you are either entering too early or too late, your stops are too big or too small, your targets are too big or too small, or your trailing stop is too big or too small. And wrong direction is actually doesn't play a major role unless you have caught the bad situation where you've traded a breakout and the price in fact bounced, so the transaction never went favorable. If the transaction has gone 20 pips favorable, then it is often not direction that's the problem. It's the way you've managed your transaction. You haven't brought a break-even stop into play or something like that. So here's the checklist. Work through it. Again, as I mentioned before, it takes some trading experience to really get the full benefit. Also, we were 3 people, so we had lots of various views helping to in this particular case. Now, if we look at some of these trades that I've shown below here, you can clearly ask, now, was this entry too late? Why didn't why wasn't the entry up there? Was the target right? The target seemed to be pretty good because it was very close to the reversal. And was the stop was clearly way too big. So every transaction you can analyze and actually find reasons where you could have improved on the performance that you did. Now, a big stop means that your risk return ratio was wrong, and also then your position sizing was wrong. So that's why sometimes people say, oh, you know, that what does the big stop matter? It certainly does matter. You have to refine all the elements of trading. This other transaction, again, look at the entry was there, and then it almost hit the stop. So the stop in this case was just right, and it also went down and probably went out at a really good time when it hit that target there. But I hope you've got some ideas on how you use this checklist, a very simple checklist. But if you do this for, let's say, between 20 and 40 transactions, you will start seeing trends in the way you trade, and by changing those trends, you can improve the results that you have. For instance, one of the things that we found is that when you double your stop, your success rate doubles at the same time. So that's one of the things we found when we played around with these concepts, but that doesn't always hold true. But that is certainly, in certain market conditions, big stops can improve your success rate. Please take this checklist and analyze it. We are posting it on in our premium forum. Plus, we are actually going to give you ideas on what to do if you're entering too early, what to do if you're entering too late, that type of thing. So we'll expand on this particular checklist. Now, I hope you've enjoyed this video and that you've learned quite a lot. Remember, the links to items that I've referred to in this video will be available to you in the description as well as in the commentary of the video. I think we've covered a lot of ground in this video. It's been a long one, and I hope that you've learned quite a lot from the principles that I've set out. Also remember, the story relating to the 3 millionaires happened 20 years ago. So it is not the only way that you can get success in Forex trading, but it is just an example of what happened in the past. Things have changed considerably now. Automation plays a much bigger role, and your skill sets required to trade the Forex market are completely different. You now need to be an expert at optimization and setting, finding, and portfolio management, and a whole lot of other things. A completely new skill set to the one that existed 20 years ago. So from me, Alex Deploy, cheerio.